For a look at some of the movers this morning, I want to bring back Jenny Horne, co-host of Next Gen and markets correspondent. Jenny, let's start out with some of the earnings that are acting as a catalyst. We've got American Express in focus this morning. The stock selling off a little bit. Why don't you take us through some of the numbers first?
Yeah, Dan, frankly, it's amazing this name is lower. And I know there was a relatively higher bar set because of the fact that, this name had been pretty much sitting at its 52-week highs. But all things considered, the results were solid. We saw that they increased their dividend. They highlighted record levels of card member spending. Although it seems like we're shrugging off a lot of those positives days. We dipped and now trying to recover. I've been watching this name really since the open to see if we would see any of that selling easing. It's just sort of moderating now around 2% to the downside. But for 2025, they do expect revenue growth between 8 and 10%, earnings per share between around $15 and $15.50 a share. Estimates were calling for around $15.24, so that was pretty much at the midpoint of the guidance they gave. But now for their fourth quarter, we did see that they narrowly beat expectations and were able to provide, better than expected revenue, as well as earnings and revenue were considered. And for the full year, also saw record revenue top around $65.9 billion. That was up 10% year over year. Also posted record net income and earnings that were up 25% from a year ago. So the fact that this company, for as massive and as successful it has been, is still able to grow in double-digit percentages on an annual basis is frankly amazing. And their billed business, which is a key metric that does represent the cardholder spending, increased about 8% on a year-over-year basis. So regarding some of the commentary we heard from management, they did say that there was record levels of annual card member spending, as well as record net card fees and a record 13 million new card acquisitions. They continue to add millions of merchants locations to their network globally. So the growth trajectory, the growth story here with American Express is still intact. Maybe just we needed something outstanding that this report just didn't give, because frankly, it's difficult to find what we're not liking here is we're down over now 2%.
And also, I wonder if it's just because of how much this stock has run on a year-over-year basis, and they did have a slight miss, it looks like, in terms of EPS, but some of this could simply be just taking some profits. Any other takeaways, Jenny, on Amex?
Well, I will also say that this is known as more of the affluent spender type of banking system, as well as type cards. So they are always compared to like your Visas, your MasterCards. They're an entirely different company. So I don't think it's like apples to oranges, but I do think it gives a great read on those that are still willing to spend. And the U.S. consumer, as we know, has been our resiliency of the last several years. So it doesn't seem like this move is necessarily maybe depicting that, but the report was solid. And if you're looking to see a barometer on how those that are maybe more affluent are spending, it wouldn't tell you any signs of slowdown are right now affecting American Express's results.
Okay, all right. I talked to an economist earlier, and she talked about how the consumer is still holding up. So and we've continued to see this in this labor market that continues to be tight. So it didn't seem like there's cause for concern, even though there was some data about consumers just making the minimum payment. We'll continue to watch that one. All right, let's talk a little bit about Boeing. Boeing was initially lower after issuing some new guidance. Now it's just kind of choppy right now, but it looks like there was some, really this fourth quarter is going to be worse than expected, but maybe it's priced in. Take us through what Boeing is saying now.
The resiliency of this stock, frankly, just astounds me. The fact that we were actually positive on what was objectively a pretty awful fourth quarter update. The results were so bad, they basically decided to give investors a heads up. So the saving grace is clearly everyone knew how bad it was going to be if we're reacting this way. We're up on the session here. So providing these preliminary fourth quarter results ahead of that actual release on January 28th, losses are much larger than have been expected. Fourth quarter sales now projected at around $15.2 billion and comparable to the $16.6 billion estimated. Losses per share at $5.46. Street had been expecting a loss of around just $1.55 a share. So the numbers are way off. And again, to call them disappointing, I think would maybe be misleading. The fourth quarter did include this labor strike that lasted about 7 weeks. That along with this reduced production, the strike's resolution meant that large cash payouts were available to these workers. plus the fact they also recognized charges for large employee layoffs and wrote down assets related to underperforming programs. But again, I almost think it's encouraging that clearly no one expected much different, just again, based on the performance right now. And this name has continued to be one that struggles, one that really weighs on I think, a lot of like the industrial sentiment, as well as they have an interesting read into defense. But the street right now, I was reading a Citi note where they kept their buy rating. That's encouraging. They did trim their price target by $2, but they said that this impact of new information, they're just now slightly updating their model. I was also reading another note that highlighted, well, we can expect to see more downside perhaps, and we can see a lot more of these losses. For example, Vertical Research Partners, this note, they do say that right now these eye-watering fourth quarter losses will at least not surprise. And that's something we know to be true, is that the street does not like the unexpected. At least now we know some of what we can expect into next week.
Yeah, I think that's what it was. And there were already indications that it was going to be very difficult. They had an incredibly difficult year. The fourth quarter did include some of that period of the strike, which was almost 2 months. So, that certainly caused some pressure on its results. And then I guess it's almost like it's a reset button for Boeing, considering, and you and I have talked about this, that they haven't performed well since pre-pandemic, going back to 2018. So it looks like this is a kitchen sink quarter. Anything else, Boeing, Jenny?
It really does. And I was looking at for 2025, they're projecting now about 550 plane deliveries, generating about $1 per share on that profit. That would actually be, I was saying how they're not, earlier today, they're not profitable. They haven't been profitable since 2018. So if they actually came in line with that guidance, it would be their first full year profit since 2018, which is maybe encouraging here. But I think that anytime you can get deliveries back on track, that's huge. And I think that the necessary part of the conversation is this is still majorly a duopoly, which many argue is why we actually haven't seen shares falter more with some of the majorly company-specific headwinds they've faced over the last now 7 years or so. So it's been more than just the pandemic. It's been more than just a difficult economy. It has been very much specific difficulties managing and controlling a lot of their supply chain and really the quality control.
All right. And then Novo Nordisk, that one's in focus today. I know it just trades as an ADR here, but it's got some upbeat trial results. It looks like this was a win that Novo Nordisk needed. What are the details, Jenny?
So a much needed win, of course, for Novo Nordisk, as this name had slipped pretty decisively behind its rival Eli Lilly in the battle for dominance in this GLP-1 weight loss market. However, we saw shares pretty massively sell off on data that did highlight that CagriSema did fall short of expectations. So I double checked these numbers because I know we were looking at them a bit earlier. Patients lost 22.7% versus the 25% expected over a 68-week period. However, though, the update we got to this was a different drug, but the data was concerning this phase 1b/2a trial of an injectable version of this drug called amycretin. The patients had lost around 22%, but after 36 weeks. So time frame is important there because this actually would make it the most effective drug on the weight loss market, just comparatively to Eli Lilly's Zepbound. So if it does work better than that drug, would be a huge win here. It would also help them claw back again some of that lost market share. However, still in the relatively early stages, Novo did notably not provide much details on their safety and tolerability in this news release we got this morning. So these names have continued to be, frankly, astounding. And Novo Nordisk's move to the downside has been almost equally as astounding because demand doesn't seemingly right now see any weakness in the foreseeable future. But I do think that anytime you're able to give data to back the efficacy of your drugs that will continue to outperform the rest, that's huge, especially because it does feel like right now everyone's shopping for what can make them lose weight the quickest. And we were mentioning the ways in which we would both be more willing to perhaps take a pill than an injectable. I will say they did present a pill version in September, which had very positive efficacy rates, but they haven't really seen much then moving forward with its tolerability. So they're trying to make a pill gel, which I can only imagine will be even more widely adopted by the public, because I do think there's somewhat of a hurdle with the needles and having to inject yourself. But that's the next step of growth, I think. Give me this in like an oral dose, and I think that's where I might sign up for this, Diane.
The hurdle with needles is pain. That's the hurdle there. All right. Novo Nordisk shares up more than 8% on this. Eli Lilly making a sympathy move up more than 1%. Thanks a ton, Jenny Horne, markets correspondent.